Hello everyone, this is Ignatius L. Jackson CPA and you're tuned into my YouTube channel. Today's episode is about an exciting topic. As we approach the end of the year, one thing that people are often trying to consider or think about is, should I buy an auto or a vehicle or a truck of some sort before the end of the year so I can get some additional write-offs or deductions on my taxes? That's a great question. And we're going to talk through some stuff and give you some perspective and thoughts and advice on whether you should or should not buy said vehicle. Go ahead and stick around. We'll be right back in a second. All right, everyone, and we're back. So the conversation about auto deductions, whether or not you should do an auto deduction, when I say auto deduction, whether or not you should buy a new vehicle is a decision that really is going to be dependent on your business, okay? And also dependent on how much you're using the vehicle in your business, okay? So let's say, for example, you have a vehicle that you've had for years and you only drive it for your business periodically, okay? Well, then in that case, you probably don't need to go buy a new vehicle, okay? Just continue to take a mileage deduction on your taxes and you should be fine, okay? If you, however, are using a vehicle a lot in your business, like a real estate agent, I don't know, who else drives a lot in their businesses? Truckers, that kind of stuff, might be driving a lot for their business, like a service vehicle or something like that. Those are the people that probably could justify buying a new vehicle and writing off pretty much the whole thing, okay? Or if you have any other business where it's taking you around, like Uber drivers, DoorDash, Uber Eats, all that kind of stuff, then okay, you're driving the vehicle a lot for business, it might be justified in taking that. So let's go through and talk about some of the criteria on what you should be considering and thinking about before buying said vehicle and how you would go through accounting for it and taking a tax deduction for the use of that vehicle, okay? So the first thing I want to say is there's only two ways you can write off a vehicle, okay? It's going to be mileage deduction or actual deduction, okay? So typically the easiest thing to do is a mileage deduction because you don't have to track your gas, you don't have to track, your interest payments on your loan, stuff like that. Well, technically you still would have to track the interest payments, actually. Let me step back on that because you can still take that as a deduction. You wouldn't have to track your maintenance. You wouldn't have to track depreciation, all that kind of stuff. So the mileage deduction is a lot easier for sure to go through and do than doing an actual deduction on your taxes each year, okay? So the question then becomes, which option should I take? Okay. Now, if you have a vehicle where you don't drive it that much for your business, like I mentioned before, okay, less than 50% business use, doing a mileage deduction 9 times out of 10 is going to be the right answer. Okay. If you use your vehicle more than 50% for business use, then doing an actual expense deduction will probably make sense in some cases, but not all the time. Okay. Now, how do you determine how much you use it for business? A mileage log. That is the most quintessential thing that you have to make sure that you have inside of your repertoire, your documentation, is a mileage log whenever you're trying to take a vehicle deduction. I don't care if you do actual expenses or mileage. You have to have a mileage log to support how much you're using the vehicle for business versus personal. Okay. Now, this is even if you have a fleet of vehicles. You're supposed to have a mileage log. So there's a lot of apps out there that help you to track all this, okay? MyLikeQ is a good one. QuickBooks has a tracking system inside the QuickBooks Online ecosystem. There's another one called Everlance, I think, that's out there. So you have a few different options that you can use to track your mileage. You don't have to do this manually. You can have it on your phone. It's going to track everywhere you go. And then once a week, once a month, you go through and you kind of record all those activities as either business or personal, and that's going to give you your percentage. Okay, if that percentage is greater than 50%, consider doing actual. If it's less than 50%, usually you're better off just doing mileage. Okay, now why would you want to do actual versus mileage? Main reason is you're going to get more money. Okay, what can you deduct when you do actual expenses? Here's what you can deduct. You can deduct the gas, you can deduct your interest payments, you can deduct your repairs, you can deduct depreciation on the vehicle itself. Okay, and we're going to talk about bonus depreciation here in a second. All right, and you can deduct registration fees, car wash fees, radio, like if you got Sirius XM in the car. So basically everything that pertains to the vehicle, you can take whatever that percentage is and apply that to the total cost. So let's say, for example, all those costs we just mentioned add up to $10,000 for the year. Okay, and let's say that you drive the vehicle 80% for business use. That means you get an $8,000 reduction in that year. Okay, now let's say, for example, you have, I don't know, 10,000 miles that you drive for the year. Okay, so what you could do is determine, okay, what would be better? Should I do the mileage deduction or the actual deduction? You can kind of compare the two, but you have to be careful, because once you choose one, switching to the other is either not allowed or very difficult. Okay, so you have to be cognizant of the fact of you have to decide what you're going to do kind of at the onset. And so if you choose the mileage deduction initially, then you can change to actual later on. If you choose actual initially, you cannot then go and change to the mileage deduction later. Okay, so yeah, it's kind of one of those rules that they have out there in the tax code that says you got to stick with the actual deduction if you start at that first. But if you start with mileage, then technically you can switch to actual at a later date if you want to. Okay, now, does it have to be a new vehicle or a used vehicle? Does it matter? No, it doesn't really matter. All right, and so let's talk about bonus depreciation versus Section 179. I hear about this a lot.
Oh, just do Section 179.
That may not be the best thing for people. Come on now, you guys got to know what you're talking about. Right now we have 100% bonus depreciation. Okay, so unless you live in a state that does not recognize bonus depreciation, 9 times out of 10 you're going to take bonus depreciation over Section 179. Let me tell you why. Because there's no income limitation related to bonus depreciation. Meaning, if you have a net income of $25,000 after all your other expenses, and then you have an auto deduction of $30,000 that you want to take, you can actually take that and create a $5,000 loss on your taxes. Whereas if you do Section 179, you're going to be limited only to your income, so you'd only be able to zero out your income for that year. Okay, so, and that could be beneficial to someone who's got other W-2 income, or a spouse that works or something like that they want to offset for the first couple years of their business as they're starting it out. That's a powerful tool to be able to offset that income by doing bonus depreciation instead of Section 179. So be careful when you got people out there spouting stuff like, oh, Section 179 is the greatest thing ever. Yeah, it was before we had this little thing called 100% bonus depreciation. And starting next year, when bonus depreciation starts to taper off a little bit, Section 179 might make a bit of a comeback. But again, you have to do the math and figure out, am I better off taking the 80% bonus depreciation deduction, or am I better off taking the 179 deduction and being limited to my income? Now, if you have a high income business, right, there's not much of a difference between the bonus depreciation and the 179, because you're not going to be subject to the income limitation if you have that. But there's a 179 limit that you can do each year, and whereas the bonus depreciation, there is no limit on that. Okay, so there's a few little subtle differences between the two, so you have to be a little careful listening to these places that are telling you, oh yeah, just do Section 179. That's not necessarily what you want to do. All right, so there's another option that's available currently. Now, if the vehicle is under like $19,000 or so, I don't have it written down exactly what the inflation adjusted amount is for 2022. So it's probably around $19,000, I believe. If the vehicle is less than that in terms of the cost of it, then no matter what kind of vehicle it is, you'll be able to write off the whole thing as long as you can justify 100% business use. Okay? You can do that whole thing in the first year. All right? That's an option that's available to you. You can always opt out of bonus depreciation, by the way. You don't have to do it. So if you'd rather take the deduction over 5 years instead of all up front in the first year, you can definitely do that. Okay? If the vehicle's over $18,000, then the only way, or 19,000, excuse me, I think is the around the inflation adjusted amount. If it's over $19,000 for 2022, right? Then unless it's an SUV or a truck that's over 6,000 gross vehicle weight rating, just to be clear, it has to be gross vehicle weight rating, not whatever other weights that are out there for vehicles. Okay, it has to be the manufacturer gross vehicle weight rating for that vehicle. All right. If it's over 6,000 pounds, then you are allowed to do bonus depreciation on that whole thing, even if it's over $19,000. Okay. And I'll confirm the actual amount that we're talking about here, and we'll post it in the comments below after this video. Okay. I should have had that written down for you. I apologize. So that's something that's available for you. Okay. You can do up to $19,000. And that number is going to change every year, again, depending on inflation. All right. So that's what people are talking about when they say, like,
Oh, should I go buy a G Wagon?
so the G Wagon's over 6,000 pounds, and so they're trying to say, oh, I'm gonna go buy a $200,000 car. How much the G Wagons are now, who knows? And I'm gonna write all that off in my business. Okay, sure, but now we get into the topic of should you? Okay, how much sense does that make to go buy a $200,000 freaking dollar car just to save yourself on taxes? That's the stupidest thing I've ever heard of. Okay, here's what I'm going to tell you. Buy vehicles because you need it for your business. It's functional, it works for your business. Buy something that is reasonable. Don't go out there and spend $200,000 on a vehicle. Let me tell you the opportunity cost of that. I've talked about this before. Okay? The opportunity cost of buying $200,000 vehicle, same thing with the house. Opportunity cost of buying $1 million house versus a more modest house, right? You can take that extra money that you're going to spend on that house and invest it in either a rental property or some other investment medium that's going to have you some compounding interest over long term, right? And you're going to ultimately have more money in the long term by just doing a more modest vehicle than doing something that's out of control. Even if you have the money, okay? Even if you have the money, don't get me wrong. I mean, there's some business owners that are very successful. They have a lot of extra cash. Even if you have that money, don't go out there and buy a vehicle just for the sake of saving money on taxes. That's silly. It's absolutely silly. Instead, use that money to go and invest it and save yourself more in the long term. Okay? There's other strategies that you can utilize to save yourself money on taxes. And if you employ those, you wouldn't be so worried about buying a G Wagon. Okay? So should you buy it? Yes or no? You have to look at facts and circumstances. All right? You have to determine for you and your business what makes the most sense. Okay? If you need the vehicle, like I said, a lot for the business, okay, go ahead and do it. If you are not too sure if you need the vehicle out for your business, then don't go out there and buy a new car. Just use what you got and just take a mileage deduction. Make it simple and nice and easy on you. Okay? I mean, let's not get crazy, people. Let's be reasonable with what we're doing. All right? So don't just buy a vehicle just for the tax deduction, please. I hate it when people come to me and say, should I buy this for the tax deduction? I mean, yeah, in theory, it does give you a tax deduction, but let me tell you what happens usually. Okay? That person is not going to use that vehicle 100% for their business. So guess what happens? Even if you could justify taking 100% deduction in the first year, if you in the future year do not use it 100% for business use, we have to recapture some of that previous depreciation, which means you're going to pay income taxes on some of that previous depreciation you took in the prior year in a future year. Okay? Because every year you own the vehicle, we have to determine how much was your business use for that year. And based on that, we have to either we're either good with our depreciation deduction that we took as a bonus depreciation, or we have to recapture some of it. So you don't want to play these games, people. And let me tell you one of the biggest fallacies that I hear about vehicles.
Oh, I have my logo on the side of the car. My logo.
About XYZ, I don't know, shirt printing, or XYZ real estate agent, or blah, 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 blah. I don't know. There's any number of factors that people, oh, I painted my whole car. It says XYZ real estate agent. And it's all advertising. It doesn't work. There's very clear cases about that says it does not work. If you get audited by the IRS, you will lose that argument. Okay, you have to have a mileage log. I cannot stress this enough. If you don't have a mileage log to support your business use of your vehicle expenses, you will lose in an audit or examination, whatever you want to call it. You're going to lose. I've had people that have lost because they don't listen to people. I mean, we tell you, there's a lot of CPAs and accountants that tell you, make sure you have a mileage log, and you guys continue to ignore it. One other thing I'll mention, when you take the mileage deduction, this is something that's often missed. So please double check your accountant to make sure you're factoring this stuff in, okay? When you do the mileage deduction on your taxes, you can also write off interest expense in addition to the mileage. You can write off parking in addition to the mileage, okay? Those are two things that you can write off in addition to the mileage deduction, because the mileage deduction does not factor in interest or parking. Okay, that's something that's often missed on returns. Because you often think, oh, well, I got the mileage deduction, so I don't have to do that. Still tell your accountant how much you paid in interest and how much you paid for mileage, because those are additional deductions that can be added to the standard mileage rate and save you some money on your taxes. All right, well, this has been a video about auto expenses. Hopefully everybody learned a little something. Hopefully you enjoyed it. It's something that's pretty cool. A great little tips strategy. If you need a vehicle, there's definitely some perks to it. But again, don't just go buy a vehicle just for the sake of buying a vehicle and saving on taxes. So hope everybody is enjoying the holidays. This is a nice little reminder for year-end stuff, because I know a lot of people are considering some stuff to do at the end of the year. If you're looking for some advice or consulting or some year-end planning, feel free to reach out to us. We can get you set up with a consultation with me to go through and look at some of your stuff and figure out how much you should plan to pay next year, or if there's even some stuff that we could potentially do to save you some money on taxes for this year. If you're having a good year, definitely make sure you meet with us before the end of the year so we can take advantage of all the opportunities we can take advantage of. Okay? Hope everybody has a good one. We'll talk to you more later. Peace.